Welcome to Dinar Community, your trusted source for the latest updates in finance, in-depth expert opinions, and exclusive perspectives on the ever-evolving global currency landscape. We pay close attention to key currencies like the Iraqi Dinar (IQD) and the Vietnamese Dong (VND), which are drawing increased interest as the financial world enters what appears to be a pivotal phase this May 2025. This isn't just about routine market changes. It may mark a historic transformation in how wealth is structured and how the international monetary system operates. Investors, economists, and currency watchers are paying especially close attention to what could become one of the most significant financial developments of our time. In this exclusive coverage, we unpack a major financial leak that is rapidly gaining international attention. This is not your average market rumor. If the reports are accurate, we may be witnessing a disclosure that reshapes how global markets evaluate two long-overlooked currencies, the Iraqi Dinar and Vietnamese Dong. Unlike the countless speculations of the past, this leak appears to carry weight. It's reportedly supported by confirmations from insiders within the financial and regulatory sectors, sources considered highly credible. If these reports are indeed legitimate, we could be looking at a landmark event in global finance and investment planning. What sets this situation apart is the quality and possible authenticity of the information involved. It could significantly sway investor behavior and prompt major institutions to reassess their foreign currency holdings. The leaked data, according to initial findings, stems from none other than Bank of America, one of the world's financial giants. According to various independent sources, internal documents from Bank of America suggest projected exchange rates of $7.90 for the Iraqi Dinar and $4.52 for the Vietnamese Dong. These values would represent a monumental revaluation of both currencies, numbers far beyond any historical benchmarks and suggestive of a complete shift in the current global monetary order. This revelation has already triggered a wave of activity across investment networks, as market participants reconsider their positions. Analysts and economists are now trying to decode the broader implications of this unexpected development, especially as the story gains traction across credible sources. Multiple insider accounts, from professionals linked to regulatory agencies and central banks, have echoed similar details, giving more weight to the legitimacy of the leak. Some even claim that high-ranking officials within the US Treasury may have been briefed on or involved in discussions around this potential revaluation. That level of involvement suggests that the situation might extend far beyond a simple banking miscommunication. In fact, it could signal a significant shift in US and global monetary strategy. The documents referenced are reportedly not speculative simulations but long-range planning documents typically used in intergovernmental and central banking strategy sessions. According to sources close to the matter, these rates may have been in discussion for years as part of a broader international effort to reassess and correct outdated currency valuations, particularly for nations with strong economic potential and undervalued currencies like Iraq and Vietnam. These developments seem to point to a coordinated plan among leading economic powers to recalibrate the global currency structure. Many experts believe that the Iraqi Dinar and Vietnamese Dong have long been undervalued due to outdated geopolitical views and legacy economic models. The involvement of heavyweight institutions such as the US Treasury, the International Monetary Fund (IMF), and major multinational banks suggests this is part of a comprehensive global strategy rather than an isolated event. If verified, this could mark a realignment of international economic influence, favoring nations that have made significant strides in growth and reform. The push for de-dollarization, where nations reduce reliance on the US dollar in trade and finance, is also a contributing factor. Countries are increasingly turning to local currencies, and in this new paradigm, both Iraq and Vietnam emerge as key players. Iraq, with vast oil resources and ongoing reform, and Vietnam, with its booming manufacturing sector and trade appeal, are both ripe for currency revaluation. Let's take a closer look at what's driving the shift. Iraq has undertaken extensive reforms to modernize its financial institutions, increase currency reserves, and boost transparency. These moves aim to stabilize the dinar and more accurately reflect Iraq's position as a resource-rich nation. On the other hand, Vietnam has evolved into a global manufacturing hub. The country has attracted massive foreign investment and expanded exports, positioning its currency for a substantial reevaluation based on economic strength alone. If the leaked figures, $7.90 per dinar and $4.52 per dong, become reality, it would mark one of the most dramatic shifts in monetary value in modern times. This would not merely reflect economic value, it would recognize a changing global balance where emerging markets start commanding greater respect and influence. Such a revaluation would likely redirect global trade routes, reshape investment portfolios, and shift geopolitical influence toward previously underestimated nations. To assess the scale of this potential shift, we spoke with financial professionals who emphasized that if confirmed, this revaluation would lead to a massive influx of capital into Iraq and Vietnam. Investment firms would rapidly rebalance their holdings, and banks would likely overhaul their currency exchange operations. In the short term, expect volatility. But over time, a confirmed revaluation could offer outsized returns for those holding IQD or VND, returns rarely found in traditional investment assets. However, professionals stress that only verified, credible information should guide decisions. Speculation without confirmation could result in avoidable losses. Should institutions such as Bank of America, the US Treasury, or central banks in Iraq and Vietnam formally acknowledge these changes, we could see a swift response from global financial systems. Banks would likely revise compliance rules, transaction limits, and exchange procedures, especially for large transactions. Individual investors will need to be well prepared. Proper documentation, awareness of tax responsibilities, and a long-term financial strategy will all be essential. Working with licensed financial advisors will help ensure gains are properly managed and protected. What makes this moment especially significant is how closely it ties into larger geopolitical strategies, particularly those driven by BRICS nations, Brazil, Russia, India, China, and South Africa. These countries have long advocated for alternatives to Western-controlled financial systems and the US dollar's dominance. If the revaluations of IQD and VND are aligned with these movements, we could be witnessing a fundamental restructuring of financial influence on a global scale. Emerging nations would no longer be bystanders but active players shaping the future of international finance. For current or prospective holders of IQD and VND, this is a critical time. While the leaked projections are unconfirmed, they offer a glimpse into a potential economic turning point. Caution is necessary, but so is attention to detail and preparation for possible changes. If the revaluations proceed as indicated, it will not just change the value of two currencies. It will signal a transition in global economic leadership, one that is more inclusive of rising economies. This transformation could impact trade policies, commodity prices, debt structures, and foreign aid models, all traditionally centered on the dollar or euro. The global economy may soon enter a more balanced, multipolar phase. To track this evolving situation, monitor 1. Official statements from Bank of America, the US Treasury, or the central banks of Iraq and Vietnam. 2. Policy shifts that suggest alignment with broader monetary reforms. 3. Market behavior, including sharp movements in currency volumes or global capital allocation. 4. Expert analysis from think tanks and financial institutions interpreting the long-term impact. To summarize, reports of an Iraqi dinar revalued at $7.90 and Vietnamese dong at $4.52 have ignited worldwide interest and speculation. While these figures remain unofficial, the conversation alone is enough to prompt deep analysis and preparedness. This moment represents more than possible profit. It reflects the potential arrival of a more equitable global financial framework where emerging nations are finally acknowledged for their economic strength and reform efforts. Thank you for joining us at Dinar Community, your top resource for real-time updates and strategic financial insight. If you found today's report informative, be sure to like, share, and subscribe to stay updated as these extraordinary events continue to unfold. Until next time, stay informed, stay grounded, and stay ready for what could be a game-changing chapter in the world of finance. Like and subscribe for more videos.